Welcome to the latest Business Finance Bulletin, episode 226. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, Barclays tie-up with online invoice discounter Marketinvoice, company insolvency figures reveal year-on-year rise, and small businesses' reluctance to borrow continues. In previous bulletins, I've been giving you examples of collaboration between businesses operating in the finance space, particularly collaboration amongst old world and new world providers. The old world providers, of course, being the traditional high street banks, and the new world providers being the challengers who have arisen since the credit crunch started in about 2010. Well, the latest example of this collaboration between old world and new world is Barclays Bank's announcement of a tie-up with Marketinvoice. In fact, it's more than a tie-up. Barclays have announced that they've taken a significant minority stake in Marketinvoice. Now, who are Marketinvoice? Well, Marketinvoice are an online invoice discounter. They started in 2011, and since then they've discounted about £2.7 billion worth of invoices. What do they do exactly? Well, if you've got invoices out with payment due in 60, 90, 120 days, you can't afford to wait for payment, well, you go along to someone like Marketinvoice and they will give you a certain percentage of that invoice on day one. It really helps cash flow. And what's really interesting about this tie-up, of course, is that Barclays does have its own invoice discounting arm, but it is focused on larger businesses. So this tie-up has really been for the smaller businesses, its smaller client base. And what Barclays have said, it's going to be a pilot first of all for businesses in West Midlands, East Midlands, Hertfordshire and also Northwest London. If it's successful, then they'll roll it out in 2019. So there's a really interesting development there about how the old traditional high street guard are partnering up with the new kids on the block. Let's move on to a review of the latest company insolvency figures as released by the Insolvency Service. Now, these quarterly figures cover that second quarter in 2018 from April to June. Now, when compared to the same period in 2017, the figures reveal a 12% increase in the number of businesses entering into insolvency. Now, I think you agree that's a significant jump. Now, however, if you compare to the first quarter of 2018, there's actually been a fall of 12.4%, which on the face of it, you think, well, that's good news. Less companies entering into insolvency. However, that first quarter did include a number of high-profile insolvencies and also a large number of bulk insolvencies. So we're not really comparing like with like. So comparing that quarter 2 18 to quarter 2 2017 is much more robust. And that's where we see that 12% jump. Now, obviously, as I record this, we just had the news about an increase in interest rates, that 0.25% jump up to 0.75%. Now, there are a lot of what are called zombie businesses out there. These are businesses that are just about managing at current interest rates, just about holding on. And it could be that this increase in interest rates is enough to, unfortunately, topple them over. So I don't think we're out of the woods concerning future increases in company insolvencies. So what can you do? Well, if you are in that position, don't forget to seek out professional advice. Look out for your local insolvency practitioner. If you don't know where to look, just go along to the Insolvency Service website and there's a directory there, and that will be able to help point you in the right direction. Let's close this bulletin by taking a look at the latest bank lending figures to small businesses and small business owners' attitude to borrowing money. The latest figures to the end of June 2018 have been released by UK Finance, which is the umbrella organisation for all the main high street banks in the UK. At the end of June 2018, they've said that the total amount of money currently outstanding in terms of lending to small businesses compared to June 2017 has fallen by 1.8%. So you can see businesses are reluctant to borrow. Also, the Bank of England's figures out at the end of June, figures differ slightly. They reckon that there's been a 0% growth between June 18 and June 17, so pretty flat. But overall, it just shows there is a reluctance amongst business owners to borrow. They're paying debt back quicker than they're actually borrowing new money. This is also borne out by the fact that Cash, the amount of money held on current accounts and deposit accounts, is also increasing. UK Finance says to June there's been a 2.3% increase in the amount of money that businesses are holding. So we can see paying down debt and then hoarding the cash on current account and deposits. It just shows business owners are not that confident when it comes to borrowing money. Also, as I mentioned in the previous segment, we've had this interest rate increase, so it'll be interesting to see whether that further affects the appetite amongst business owners to borrow money now that they deem perhaps borrowing to be even more expensive. Certainly interesting times ahead. Well, that's it for another bulletin. As ever, I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. It all helps. So thanks very much. Look forward to being with you next time. And in the meantime, have a great, successful and profitable week.